Welcome to Credit Unlocked, Better Scores, Better Savings. My name is Bree Shalito. I am the Director of Financial Wellbeing for Ent Credit Union, and I'm excited to be here with you all today. Excited to talk about credit scores. We'll talk in just a moment about the key takeaways, just giving folks just a moment to get in here, but we're just going to dive right in. All right. Some of the things we're going to be talking about today are going to be the importance of credit, using credit responsibly, and the credit breakdown. So we'll talk about a few things as we go through, just what credit is, what it's made of, and get into kind of some of the details on how you can use it to save more money. First, what is a credit score? A credit score is typically a 3-digit number that's made up of what's on your credit report. It's used by financial institutions, but other services, we'll talk a little bit more about that, to determine the risk level when it comes to loaning you money or a service. So a lot of folks will use that to determine things for things like rentals. Landlords use it, jobs use it, definitely lenders use it to have that, but we also have a couple others that will use a credit score to determine whether or not they're going to loan you money or let you use a service. So it tends to be a pretty important number when it comes to how much you're paying for different things. How the number is made starts with those credit reports, as I mentioned. So right up at the top, you can see that there are various credit bureaus that are using that information that's going into your credit report. How those used to work is that those used to be regional. So folks across various regions of the US would use different scores. But as it's morphed over the years, a lot of different service providers and lenders use all three, one, or a few. Doesn't really mean a lot to you as a consumer. We're going to talk about some great ways to keep it across all credit reports, but here's how it kind of breaks down and how it works. So you have three main credit bureaus: TransUnion, Equifax, and Experian. Then from those credit reports, you actually get credit scores based on a various amount of factors from each of those credit reports that go into two different models, two primary models. The first is FICO, that's the Fair Isaac Corporation. It was developed many years ago. And then Vantage Score, which is another type of score that you'll see as those three credit bureaus merge to create their own score. The scores used to be different. They're now both the same. So as we're talking about this today, as far as the range goes, they're very similar. They're just weighted a little bit different. Today in this presentation, we're going to focus on the FICO model primarily, but it really applies to both. So you take the credit reports, that's what actually formulates down into that 3-digit score. What those scores actually look like are a little bit different based on those ranges. As I said, both FICO and Vantage use this same range, though they're a little bit different in how they're weighted, and we'll talk about those weights in a moment. What you're seeing here is the standard FICO score range starting down at 300 going up to 850. So it doesn't mean that when you get started, your credit automatically goes to 300. Those scores are typically produced by not having the greatest credit behavior, maybe missing some payments. It could even be defaulting on loans. There's a lot of different things that go into that. When you get started with credit first, you actually don't have a number that's on this scale. It's a number that kind of doesn't exist. And then based on your behavior right away, usually puts you somewhere kind of towards the middle to the top. So we'll have that there up at the top. But really what we want to focus on is getting into that very good to exceptional range, because anything over the number 740 and above is truly considered excellent, and you'll get the best rates that are out there. We like to joke that one of the main differences between 740 and 850 is room for error and bragging rights. So meaning that if there's something that happens, maybe a late payment, maybe something that was missed, there wouldn't be as big of an impact as if your credit was at 740 and it dropped into another scale. So we're really aiming for that 740 and above, and we're going to talk about how to get there. The breakdown on how that credit score is actually made is several factors that you'll see here, these 5 factors, the largest being payment history. I'll dig into each of these a little bit more, but the largest is payment history. Utilization comes next, length of credit, mix of credit, and new credit. So these are really the things that make up that credit score and are going to have an effect for a period of time throughout your life on your credit score. As I said, payment history is the largest part. That makes up 35% of what your credit score is made of. So making payments on time or early is really what's going to have the largest impact on your score. For you, that may mean setting up automatic payments, maybe setting up calendar reminders. There's several different things we can do. Another great way that we can kind of put those aside is paying towards our payments each paycheck. So even if that means making more than one payment, if that's allowed by your creditor, that can be great, especially with credit cards. That's a big one that can be missed. So making sure we have those set up for automatic or that those are going in, because that's just such a large portion of your credit score. So we want to make sure we're covering that. Late payments are going to have the greatest effect, and sometimes it depends on the type of payment. Credit cards are definitely an effect, but missing a mortgage payment can actually reduce your score depending on where you are, because it's different for everyone, but sometimes up to and over 100 points. So the larger the credit, sometimes the more of a difference that it makes, but truly the best thing that you can remember is making those payments on time and early is the very best way to improve your credit score and keep it steady. Type of payment matters. Capacity, or sometimes used as utilization, is really the largest second factor in the puzzle here. So what that means is that it's taking up how much of our available credit that we're using. So how much of that we're actually utilizing or have capacity to use. It's interesting because it makes up 30% of the score, but ideally we want to keep it under 30%. So if we have a credit card with $1,000 limit, we want to make sure that we're always spending $300 or less of that each month to make sure that it shows that we have some capacity to spend, then we aren't utilizing the full amount. The more that we use of available credit, and this is on revolving credit, so credit cards, lines of credit, the more that we're using, it shows that we're needing to use that amount of money. So keeping it below 30% is great. As we get to using 50% or higher, it's actually decreasing our credit score, showing that we're using a lot of the credit that's available to us. And once we actually max out any lines of credit or credit card, that reports immediately. So the way that this works otherwise, I say immediate because it doesn't always, anytime you actually max out your card, it immediately reports. But let's say today I have that $1,000 credit card. I have an emergency come up. I have to put maybe a couple tires on my car. Let's say that's $800. Technically, that's using 80%. But if I have an emergency fund established, I use the credit card to pay for it, but I pay it off the very next day or that next week, it might not report the full 80%. That just depends on your credit card and when it reports that information. Again, not really something you can control as a consumer. So it's better just to kind of stick with these guidelines of making the payments on time or early, keeping that utilization below 30% whenever we can, because that's really what's going to help and affect our credit. The next one is length of credit. So this, especially if you're younger and starting out, is one that you really can't have too much effect on. This means how long you've had credit and if you've used it responsibly. So this is where that myth comes from of never closing your very first credit card. I say it's a myth because it just depends. Credit is very different for each one of us. So if you've really established other credit and had other different types of credit, which we'll talk about in just a moment, sometimes that doesn't have a huge effect. If that one and only credit card that you opened first is the only credit that you've had and you haven't had other credit, that can be a huge effect. Because by closing that, we're taking that off of our credit profile. And it doesn't necessarily take off the bad, but it does take off the good. So length of credit can be a huge effect. It shows that we have a long history of establishing good, healthy credit habits. And then it also takes into the effect of individual accounts, but really holistically as a whole. So if 10 years ago you opened a credit card and then you opened another one 5 years later, it'll average those two credit cards out. Credit is complicated, so know that, but really maintaining a good lengthy history with good credit is what's going to get you the best here. New credit. This is a small amount, but it can definitely kind of take a hefty toll depending on how often you're applying for credit. Like I said, new credit's only 10%, but we just saw that length of credit is affected by this. So we're averaging out whenever you open new credit. So if you're constantly opening new credit, you're not only affecting your new credit portion of your score, but you're also affecting that length of credit. So opening a bunch of new credit lines or credit cards in a short amount of time, it hurts your score. And the reason for that is because it kind of makes you look a little more risky. It makes it seem like you need a lot of new credit available right away and that you may be in some sort of emergency situation without emergency savings to cover it. This is especially true when it comes to credit cards, and we see this a lot with the retail credit cards. So the best thing to do with credit cards is definitely just to be smart about the types of credit cards that you want and that you want to open. Having one open with your bank or credit union is always a great start. but then the stores that you typically shop at and are going to maximize the most. A lot of times people will say that you want to have, depending on the types of credit, 5 to 10 different types of credit that are open. So different credit cards, showing that you can really use all of those responsibly. But that depends for each person. And we'll talk more about how to get a personal approach here in just a moment. Mix of credit is another portion of this. So the types of credit that you have is really what comes into play. Now you'll see here that that's only 10% of the score. So that doesn't mean that we need to go out and actually focus on opening different types of credit. You can have a great credit score with very few types of credit, maybe just a car loan, credit card, things like that. But if you have different types of credit, it shows that you responsibly use one. So the top one, revolving credit, meaning credit cards, lines of credit, but the others are those installment loans, those things that you have collateral against, like a vehicle, like a home. Those are different types of credit that are really going to reflect on your profile as a well-rounded, holistic approach to credit. So we've talked a lot about the types of things that go into your credit score, but I also want to talk about the cost. This is really where it comes into play on how much credit can cost you if you aren't using it responsibly and using it to your advantage. Because you'll see here in this example, these two individuals in our example are purchasing a vehicle. Let's say for this example that the vehicle is the exact same vehicle, $25,000, and they're each taking that out for 72 months. They're getting a loan for 72 months. So for that 6 years, which is kind of what we're seeing is the average lately. So same vehicle, very different credit scores as you'll see here. The first one has that 740. Like I said, 740 and above is where you're going to get the best rates that are out there. Right now, 5% is a potential rate that you could get, but right now the rate market is interesting. In that example, that person pays a car loan of $402 a month. And over the 72 months, they will have paid a total of $28,989. So we've paid some interest. We'll see that over the 72 months, more than the 25,000, but not an incredible amount more. Our second person has a 550 credit score. In this example, we're going to give them the highest rate that you can get in Colorado, which is 21%. I want to add the caveat that we have seen car loans come through with higher than that based on where they were financed. Could be another state, could be through a dealer that's licensed in multiple states, but Colorado has kind of a cap of 21%. So let's say they're able to get financed, they get financed at 21%. Their monthly payment is quite a bit higher than the other person. That's every single month, $211 more. So they're at $613.40. Their total cost over that 72 months is $44,165 for that $25,000 vehicle. So credit can not only cost you when it comes to loans like you're seeing here, it can also cost you in employment opportunities, military security clearances. It can even have an effect on getting utilities turned on, or even with a cell phone. Sometimes cell phone companies, if you don't have good credit established, they'll want you to put a down payment. It's typically $500, and they want to hold that for a year. So credit is huge. It makes a big part of our financial picture. So I'm so glad you're here today to talk about it because the cost can really be impactful. I've mentioned credit cards, and I know there's credit card hesitancy out there, but credit cards are a terrific financial tool for your credit if used responsibly. And I'll tell you why. Credit cards, of course, have an interest rate. But if you're paying that card off every single month on time and early, you don't pay a penny in interest. That interest only applies if you're carrying a balance month to month. Otherwise, it's completely free. It affects your credit in a really great way and brings that up. So making sure we're paying on time or early. We have to know our interest rate. That's really important, especially in that emergency example I shared earlier. Let's say that I do need to replace those tires and maybe I can't pay it off right away. I know that I'm going to need to pay that off over several months. Knowing which credit cards I have in my wallet and what their interest rates are is really going to be helpful to me when I decide on the spot what card I'm going to use for that purchase, so that I know that I'm using the one with the lowest interest rate so that I can make sure to pay that off and not pay as much money. It can be free, as I already explained, but really as a consumer, sometimes the difference between that billing and statement cycle, as I talked about during utilization, can make all the difference. Those are all different. Sometimes they report on a certain day of the month. Sometimes they're shorter, only a 15-day period. So just understanding your credit card and how it works is key to making sure that we're paying on time early and that we're making sure that's helping our credit. Building your credit, for those of you who are starting or really wanting to rebuild, these are some great tips. Finding, if you are deciding to use a credit card, the right card for you. Everybody's different. Everyone's financial situation is different, and the way that you spend your money is different. So finding the right card for you, there's some amazing tools out there. I really love the tool that's on NerdWallet. There's also some amazing tools on things like Credit Karma that can really compare those cards based on what you're looking for. Some of them are cashback. Some of them offer travel rewards. There's lots of different benefits out there for different cards based on your spending. So making sure you find a card that aligns with the way that you spend your money and your values is great. Of course, avoiding charging more than you can pay off in full is always great. Opening up secured credit is also another way, especially if you're rebuilding. If you've had some hiccups, that's okay. We understand that things happen. Sometimes to get that restarted, you have to secure it. So there's some great credit cards and even secured loans out there where you take some of your money that you've saved up, put that into that secured loan. You're really borrowing your own money, but it's going to help your credit. Because the really tricky other part to credit is that a lot of times we think that things report that don't. So for example, having a cell phone in your name or having utilities in your name and even sometimes rent, a lot of times those things are not reporting your good behavior. They will report your bad behavior if you don't pay on time. Those will come right through as a delinquent payment, but they're not necessarily reporting the good things. So that's where we have to find types of things that will report good. Credit bureaus are doing a great job at actually weaving some of those things in. We have things like Experian Boost that can take in your rental history, a lot of different things to really help you along. But for right now, in the way that credit works, it's great to really have some of these options to start to build that and make sure that it's not costing you more money. And of course, I'll keep reiterating, paying on time or early, because that's the biggest part of our picture. So your credit report is very important. So the one site that's government authorized, there's tons of sites that sound like it, but the true one that's government authorized, feel free to take a screenshot or take a note, is annualcreditreport.com. That's the one that's government authorized. That one is completely free from those 3 bureaus that we discussed earlier on. So you'll be able to get a free report. During the pandemic, they made that, it used to only be 1 free per year, but they actually made it 1 free credit report per week. And so far that has not gone away. This is a fantastic way to monitor your credit, to make sure things that are on there are all yours. Because that's the other thing that's really important to check, is that even if you know that you've done a good job or you haven't really used credit, you want to make sure to check those out to be sure there's not any fraud on those. You also want to be sure that all the information is accurate, so that you can really dispute anything, especially if you're considering making a large purchase in the future, things like cars, houses, finding a new job. If there are things on your credit report that are going to affect you in a negative way, you want to know about it and be able to dispute it ahead of time, because sometimes those things are a little bit of a lengthy process. So be sure that your information is correct. As it goes back to only being able to pull 1 per year, a tip that we talk about is staggering those requests. So for example, maybe you want to pull Experian in Q1 and TransUnion in Q2, because a lot of times they're going to have very similar information. So that can be a great fraud tool to do it in that way, to stagger those requests, to keep an eye on it. So a really great way to go. We also have a tool here at Ent that's completely free. I mentioned a couple other ones, Credit Karma, because on annualcreditreport.com, you actually won't see your credit score. It'll just be the report, which is great information to have. But here we have this tool that we have for our members and non-members at ent.com/yourcredit. What I love about this tool the most, and it does not have any sales features or anything, which I also love, is that you're able to really see your credit report and score, and it really breaks it down into letter grades. So all of us, having gone through any form of schooling, are familiar with the A to F model. It really shows us which of those areas we're doing really well in and where we have a grade A and where we could use some work. Also offering the personalized advice. So for your particular credit situation, as I've reiterated several times, there are a ton of different factors that go into credit, and for each one of us, even doing something today, let's say we each pay off a car today, congratulations, it's going to affect my credit different than it affects your credit. It just depends on what's in the profile and really the overall look there. We also offer financial coaches completely free to members and non-members, so anyone can meet with a financial coach in person or virtually. I'm glad you're joining today, because April is actually Financial Literacy Month, and we're doing a phenomenal promo, actually, where we're offering some great Broncos swag, an exclusive Broncos hat. But anytime throughout the year, if you want to meet with a financial coach, They can talk about several things. They're certified folks who are here at Ent at many of our locations and virtually, but they can help you either establish a budget or kind of work on your budget, really look at that credit profile and make a plan to improve it and see how we can do to kind of keep that thriving. Savings, all different types of savings. We can look at that with you. And then also debt repayment to really tackle those hefty debt payments if those are applicable to you. So want to make sure that you know that that's available. That's all I have for today. Please feel free to check out ent.com/events for a lot of our other webinars. Thank you. We appreciate you joining. I'll take a look at the chat to see if there's any questions. But otherwise, just want to thank you all for your time and joining me today and learning a little bit more about your credit. That's a great step. Just appreciate your time and willingness to learn. If there's any questions at all, please reach out to us here at Ent. And I hope you have a great day.